Awesome. There we go. Good morning. Thank you for joining us, everyone. We have Joe Delvecchio of Visionary Mortgage giving us a great presentation. So without further ado, I will let Joe take it away. All yours, sir.
All right. Well, I appreciate that. And I've been looking forward to really meeting everyone and discussing a little more about Visionary Mortgage, who we are, what we do, and a little more of, the background and a bit of the systems we've created internally, because I know the mortgage license has been advertised to get, and I just wanted to add, a little bit of comfortability in doing so and what we can provide if you hang your license with us. Um, so I want to go over my background. All right, let me learn how to, there we go, moving to slides. So just to give you a little bit of a background, before I was in mortgages, I actually came from architectural sales. That's, building materials and having them specified in architectural plans. So that's really on the back end in terms of working with, move that, in terms of working with architects. So that's where my interest in real estate came from. And from there, I decided I'm either going to get my real estate license or my mortgage license. And I ultimately decided, you know what, I'm going to go for the mortgage license. It's a little bit different. I do have a education in finance. I did get my MBA back. It's 10 years ago now at this point. So I thought this may make sense to get. And I am actually a fairly new MLO. I started I actually I passed my test in June and I actually got this in July. So I came in at a very unique time. And fortunately, we have a lot of experience. Now, let me go into Visionary Mortgage. Who are we? Visionary Mortgage has actually been in business since 2003. And it is a mortgage brokerage. So the differentiator there is that we work with multiple lenders, which really gives us an opportunity with our rates. So we really can go around to different lenders to see what the best rate is that we can get. And it also gives us a variety of different loans that we can pursue. And now I did want to go over this too with our underwriters. We actually have two in-house underwriters, one of which Aditya has an exceptional background, and he is outstanding in terms of underwriting. So for anybody who's thinking about their mortgage license, keep in mind that we do have underwriters that are in-house, and we do have the experience to complete the loans that you need. Um, we also do pre-approvals, pre-qualifications, and pre-approvals. If you have a buyer, they only take a few minutes. We're going to be able to determine what you're going to pre-qualify for fairly quickly. And then from there, it's just getting the information, moving forward with the process. We're going to need certain documents. And feel free if you have any questions, you can reach out to us anytime on that. Oh, and one note that makes us a little different in-house is that we actually communicate directly with our underwriters. So that's a bit different where a lot of mortgage firms traditionally do not allow that to occur. But that gives us a lot of leeway in terms of being able to get the information quickly to you. And we also have our own CRM system. So I'm not sure which one Keller Williams uses, but we use Lendard. So when it comes to the loans, we can put in opportunities. We have customers, we can go through that sales process. So if you get your MLO license, you can hang up your MLO license with us, and we have a CRM ready for you as well as underwriters. So what loans do we offer? Both qualified and non-qualified. So qualified typically consists of conventional, FHA, USDA, and VA. And non-qualified can be anything such as fix and flips, um, as well as DSCR, as well as jumbo loans. So if it goes past that limit amount, that's traditionally in every state for a qualified mortgage, such as conventional, we can offer jumbo loans in the area. So if there is a $1 million+ construction project, that is something we can offer. Now, we focus on residential, but residential can include primary, secondary, as well as investment properties. And investment properties can be residential loans, and they can go up to typically around 7 to 10 before it's recommended that you go commercial. So if you're also looking at investments, we can provide loans for them. So just wanted to put that out there. So we essentially have that array of loans. I mean, if you have a buyer, we're probably going to be able to handle it. Now, I did want to talk about this. Raj mentioned a few times in in the chat, and also there's the Central Jersey Real Estate Institute about, getting your MLO. And I wanted to go over that a bit in terms of what I see the benefits are. One of which is, with the NAR settlement, I think it gives you a little bit of additional negotiating power. If you have a buyer that you really want to work with, and that buyer is looking to negotiate in terms of what your commission's going to be, mortgages are typically a point on each transaction. So if there is a buyer that you really want to work with, I think you have a bit of negotiating power. But beyond that, from an educational perspective, I think you really have a bit of all-in-one experience. You can really keep that buy and keep that customer in terms of with the information that we have. And it gives you an understanding of how pre-qualification works. It also gives you a background of what loans can be provided based on what they're looking for. And I think there's a great benefit in getting your MLO. And that's also why I really wanted to put out there the comfortability of we have a CRM and we do have underwriters. So if it's something that you're looking to do, it's something where we have everything ready for you. And one of the questions about the MLO exam, so I wanted to give my background on that. I actually got my MLO license through the Central Jersey Real Estate Institute. It did take some time to learn the material. It was new to me. And the study guide that I used is from Mometrics. It is 5 full-length MLO practice exams. And that's where I was really able to narrow down and feel comfortable about taking the exam. There were the questions are a bit different on the exam, so to speak. There's, the words are switched up a bit. It's not something you can memorize, but it was very good. I do recommend this book if it's something that you're looking to take. It was very helpful for me. And going through CJREI, it takes 24 hours of education to move forward to be able to take your exam. So New Jersey is a bit different, whereas in other states it's 20 hours. There's an additional 4 hours where you have to learn material on SAFE. Now, I wanted to go over a homebuyer seminar that we did, which actually is very conducive to what you're doing. In October, we were able to get a good amount of attendees, and at least 15 of them were first-time home buyers. And that was very exciting because we did the marketing on that. We sent out 5,000 every door direct mail flyers to 3 specific towns. So we selected those towns based on the realtor that we partnered with. Those are the areas that he was targeting. And from there, we were able to get through the pre-qualification process with a few of them. And that also helped me in a sense where it helped me get started. But we're looking to schedule them throughout all of next year. So we're looking to have one every month. And it can be a great lead generator. There's workbooks that are sent out. It goes through the entire home buying process from meeting a customer all the way through to closing, how it works. We also went over title and we went over credit repair. Highly recommend looking to partner with us on this. I'm looking for realtors, and I'm licensed in the state of New Jersey. So I'm based out of Gloucester County, so I'm about an hour, 20 minutes south. But I'm looking to partner with this, in North Jersey as well. So if anybody's interested, feel free. And I can go over more on that. We had testimonials and yeah, we also invited realtors as well, to this. It's really just about expanding your network. So it's anybody that you know is welcome to attend. But I do think that it was an exciting data point to have at least 15 buyers, especially in the market now. So just wanted to put that out there that this is something that we're looking to schedule. All right. So um, this is the no cost refinance program. is probably one of our biggest differentiators to any mortgage company. And I've researched this and I haven't heard of one that does this yet in terms of a true no cost refinance. So the rates right now are around 6.5%, and they've been that way. And in October, the rates were starting to drop a bit, and there was a bit of excitement for refinancing. There were a few people that I was working with, and they were looking to refi, and they were saying, you know what, I want the rates to go to 5.5%. And we were at 5.875, and then the rates went back up. And it's like we were right there, and now here they are, and they're back at 6.5. And this helped me in my early stage to really believe that you can't time the market and you have to work with the rates that you have. And this is why we have this program, because if a buyer is looking to get their first property and they're worried about the rates, they can get a mortgage right now that's conventional at 6.5%. FHA is a little lower, but there's more points on that. But if they get that, when the rates go a point lower, so if they get it at 6.5 and it goes to 5.5, we will refinance them at no cost. And it's a true no cost refinance program. The mortgage balance doesn't go up. Sometimes the closing costs can be rolled into the loan in this case, and in that case, the closing costs would cause the mortgage balance to go up. Sometimes they pay a fee up front, but really the lenders as well as our company, we absorb those costs. It's just, better overall, especially if they're going to, look for another lender. This just makes sense. But I think this program is outstanding because it's very encouraging for a buyer that's concerned about today's rates and wants the rates to go lower. Well, we can always do an amortization schedule, and basically show here's how much equity you're going to gain in a year or two if you buy your property now. And you can start to have your home and you can start to have that experience. And when the rates do go to 5.5% and they go a little lower, you don't have to worry about anything. We're just going to refinance you. And so if the rates ever do go back to say 4 or 3%, we're here. And I think that's very encouraging for a buyer. So that's something that really makes us unique and really sets us apart. So if you have somebody who's concerned about the rates, feel free. We can discuss that and we can have that assurance for them. All right, so open house support. So as part of Visionary Mortgage, I can come to your next open house and we can also provide marketing for you. Our marketing flyers are very unique. They're actually very data driven and show a lot in terms of what's going on in the neighborhood, what the buying prices are of homes that are average. And I think it's another unique differentiator to what we do. I can schedule an open house as soon as next week. And those are every Sunday. So I'm definitely your partner in this process. If you're looking for somebody who is focused on mortgages, and with buyers, we can do pre-qualifications on the spot. So if they don't have somebody that they're working with and they're not sure if they can afford that home, that is a service that we can provide. And now I actually, as part of my marketing and as part of some additional support for you, I send out weekly rates. So they're always advertised on our website, but I think an email is helpful. It's a nice reminder that I send out to my real estate partners where by sending this out, I'm doing this every Saturday morning. So it's right before the sales start to occur. So you're going to have our updated weekly rates. We also have updates in terms of what programs we offer, as well as what's going on in the industry. We'll provide that for you. One unique thing that we offer are HELOCs, and we actually have people who are interested in that. So, a HELOC could be for somebody who's either looking for that secondary home and they want to have somewhere where they can get their closing costs, or it could just be a renovation. Maybe they want to increase the value of their property. So this is also something that we write. This is something that we offer. So if you can and you're interested, feel free to, put in your email in the chat, or we can always, talk after this. And I'd love to have you included, in the campaigns that we're sending. So every Saturday morning, we do send out our rates. Oh, all right. I had a nice thank you message on there. But thank you. I'm actually headed to the holiday party tonight, so I'm looking forward to meeting you if you're there, and we can certainly discuss more about mortgages, more about the MLO, more about Visionary. And again, I'm looking forward to seeing you. Uh, are there any questions in terms of Visionary Mortgage and Raj, did you have anything that you wanted to add, or I know you mentioned you were going to be on here, so thanks again.
No, Joe, you did a great job, and thank you so much for taking the time. I wanted to just mention a little bit about some of the things that I wanted to go in a little bit more detail about some of the things that Joe mentioned. First of all, uh, he just kind of quickly glossed over the point about, or went over quickly about the point that the loan officer having direct contact with the underwriter. That's a really big deal. I don't know of any companies that allow that. And it's really important because what happens is that by having direct access to an underwriter, you're not going through multiple layers. And underwriters are somewhat like prima donnas. They don't like to respond to loan officers. It's hard to explain that relationship. So having direct contact, a loan officer having direct contact with an underwriter is a really big deal. The second thing that he went over, that, and he mentioned about the pre-qualifications and pre-approvals. I can guarantee you. You guys still hear me? Okay.
Yeah, we can hear you.
Okay. Um, when loan officers issue a pre-approval, what they do is they review the income documents, and they pull a credit report, and that's a pre-approval. By the way, the difference between a pre-approval and a pre-qualification is, in a pre-qualification they generally don't pull credit. With a pre-approval they do. Now, what happens with our pre-approval is that it actually goes through the underwriting process. So we don't. So when you get a pre-approval from us, it's not just the loan officer's opinion, and loan officers are not underwriters. So an underwriter is looking at the documents, looking at everything, and then they're issuing the pre-approval. Now, if you have a lot of times, what happens is that pre-approvals, borrowers have pre-approvals, and they think that, oh my God, I got a pre-approval from this company, I have to go with them. That's absolutely not true. When you when once they find a property, just give them our name, because you know there's there's two there's two big points of failure in a transaction, or when it comes to lack of communication. One is the attorney. Like, if you get an attorney that doesn't know what they're doing, or an ambulance chaser trying to do real estate, some guys like that we all know how much of a nuisance and a challenge that can be dealing with them. So we always try to refer attorneys that we know and that we have relationships with. The lender's even more important, because especially if your borrower is going to go with like a Bank of America or a Wells Fargo or a Quicken Loans, those companies have notoriously bad um, processing. They use temporary employees. They use employees that don't know what they're doing. So you want to make sure that you have a lender that you have a clear communication link with. So if you're going to refer a deal to Visionary and to Joe, you're going to have if you call Joe at 9 o'clock on a Sunday night, he's going to call you back. And that's really important because our access to our underwriters is not 9 to 5. Our access to our underwriters is till 9 p.m., 7 days a week. That's how we've structured things. So it's not only do we have better rates than everybody else, but we have exceptionally good service. So that's the thing, right? If you get your mortgage license and you become a loan officer with Visionary Mortgage, you're going to learn more, you're going to make more, but you're going to give your borrowers better rates, your buyers and your clients better rates by referring Visionary Mortgage. So yeah, wonderful job, Joe. Does anybody have any questions? No?
Raj,
So I would,
All right.
Raj,
Yeah, go
this
ahead.
is Todd Johnson.
Hey,
I'm
Todd,
still
how are you?
good. So I applied for I passed the test and applied for my license in November 15th. It's in limbo.
Yeah, Todd, the thing is that I contacted NMLS actually last night, and they're going through some type of um, end of year technology change or something. But I'm going to follow up on your circumstances. I think it has something to do with. I don't think it's the NMLS. I think it's the state of New Jersey because it's like there's a lot of work, unfortunately, similar to real estate licensing, where while real estate licensing is directly with the state, the NMLS, because it's like there's some type of federal, um, there's a federal aspect to it, which it's not very clear to me. But so the information get from NMLS, they're like the quarterbacks. It has to go to the CSBS, and then it also has to go to the state. And I think the state is the one that's creating a delay right now. But they've promised me that they're going to be getting back to me today. So I was going to reach out to you.
Okay, so you're working on me.
Oh,
All
yeah,
right.
absolutely.
Yeah, I sold a house this past week and I could have used it, but whatever.
All right.
It is.
All right. Well, listen, we're having a Christmas party if you want to come tonight
It's up in what's it?
in Hillsborough,
Hillsborough.
area. Yeah. Well, anyway, we will definitely work on that, and hopefully, you'll be on board sooner rather
All
than
right.
later.
Thanks,
Yeah.
Raj.
So,
Take care.
all right, no problem. All right, Joe. Anybody else have any other questions?
Hey Joe, Deepak here. How are you?
Hey, I'm good. How are you?
Good. So let's say if we get our license and we have our mortgage license now, we do request them all the necessary paperwork to pre-approve them. That's correct.
For
And
pre-approval, yes.
then what is the next step from there till it goes in the underwriting?
The
All
next
right. So let me answer that. Deepak, we have a very simple form that I will email to all of our associates. It's basically a 2-page form, and it's a condensed version of the loan application.
Okay.
So you mail that along with the support documents, which we'll give you a list of, and then once you have that, you send that in to us, and then at that point, really the processor takes over. The processor is involved with communicating with the borrower, and they take everything over from that point.
Okay. Okay.
Hmm.
Yeah.
Yeah. So really the job for the loan officer, it's not to process the loan, right?
Mm-hmm.
That's like in Vibha's office, Vibha's job is to originate, to bring the transaction in, and then from there, it's Niru's job to do the processing.
Hmm.
Okay. Yeah.
Right.
So we want to keep it real simple. Yeah. So
Hmm.
Okay.
all right.
I
Well,
like that.
Yeah. Probably. Yeah. I'll send you some more details. Ebook, so it's a little bit more clear how it works.
sure. Thank you so much.
But the first step definitely is get your license.
Yeah.
Yeah.
Yep. I plan on
So
it too.
all right. Yeah. All right. Sounds good. Any other questions?
And there's a question in the chat about if you have opportunities for low and bad credit people. I had that same question.
Okay. Really, that is a low and bad credit. Really, it depends on how bad the credit is, right? And there are Fannie Mae, FHA, VA. They don't have a published minimum credit score, right? So let's take FHA for example, because FHA is a little bit more lenient when it comes to credit scores. If you have bad credit, somebody is chronically a bad payer, doesn't have a good reason why they're bad, they're just chronically bad, and historically bad, then they're not going to get a loan, okay? Because if they get a loan, they're going to pay that back. Their history says that they're going to pay it. But if there was an extenuating circumstance, if that the reason why they have bad, like for example, if somebody had a divorce and the spouse ran up credit debt and dumped it all on the other spouse, and you can document the divorce with a divorce decree, or if you had a medical situation, or if you had a loss of job or whatever, you can't, when it comes to credit, and you cannot, if you're a chronic, you have bad credit and you're chronically bad. Let's say you have a credit score of 500, and the reason for that, you're just chronically, you don't pay because you don't feel like paying. Well, nobody's going to give you a loan. But if there's a reason why your credit was bad, the reason, and you can document it, then yes. Okay. So understand why these credit scores were, the credit score has nothing to do with a person's history, right? I remember because I was, I have a lot of knowledge about this topic. When credit scores, people wanted to include income with the credit score. They wanted the income to be part of the credit score. My argument was that, hey, listen, it doesn't matter what a person's income is. If somebody has a history of paying their credit on time, then that says that person's going to pay their bills on time, whether they have money or not. They're going to figure out a way to do it. And if somebody has a lot of money, there are some people that are just really, really bad payers. They're bad at financial management. They're never going to pay their mortgage on time. So that's why income is not taken into consideration when they look at credit scores. A credit score is really, and when there's the credit score does not take in, they don't know, that algorithm doesn't know if somebody had a sickness or if they were laid off or if there were extenuating circumstances. But whatever those extenuating circumstances are, they have to be explained. Now, if there's erroneous credit, if there's something that's erroneous, there's no such thing as credit repair. That is an industry that is just it's fraudulent. You'll never find anybody that has been in business for long periods of time because you cannot repair somebody's credit. Like if somebody was bankrupt, they were bankrupt. You can't get it off the credit report. Um, you can get it off temporarily for 60, 90 days, but eventually that bankruptcy is going to come back on the report. So, but like, let's say somebody has a lot of um, a lot of open small little collection accounts. You can pay those off, and we can simulate. We have a simulator where we can simulate what the credit score will be if they paid those credit cards, those collection accounts off, or if they have high balances on their credit cards, if they pay those down, we can simulate if their credit scores will go up. Because really, if you have a one-time collection account, one-time judgment, one-time bankruptcy, one-time foreclosure, your score is going to go up eventually, right? It's the historic, chronic. What drives a credit score down is chronic non-payment. You could have a bankruptcy 2 years ago, and you could have a 700 score after 2 years if you reestablish your credit. You could have a foreclosure 2 years ago. If you reestablish your credit, you can, and there's strategies for that as well. You can go and you can get secured credit cards. You can, with those secured credit cards, you can pay those on time. Once you get those, you can go out and you can, get, car loans by putting large down payments, maybe paying a higher interest rate. You can get credit card loans. So there's a lot of things that you can do. So yeah, that's a little bit about credit and bad credit. If you have a scenario that you want to discuss when it comes to bad credit, feel free to call me or Joe, and we can discuss it offline. We're happy to have a call with the person. We can pull a credit report, see what it looks like. Best thing to do, usually the borrower can get a credit report for free, or pay a small fee from the creditor, from the repositories, Experian, TransUnion, or Equifax, and we can once they send us a copy, we can give them direction. I have a very strong history with risk assessment, and specifically with credit scores and credit reports, so I can definitely help. I had a company that I sold to Experian about 12, 15 years ago, where we dealt with risk assessment and risk scoring and stuff like that.
Thank you.
No problem.
That was the best
Any,
answer.
yeah, I don't think there's anybody in the world that knows more about that algorithm than me. I wrote it. So anyway, anybody else have any other questions?
I have a
No? All
question.
right. Yeah, go ahead.
How many drinks we all having tonight?
That's what I was gonna say. Guys, come early. Come. The party starts at 6, but be there at 5:45. Let the alcohol flow. You know what my father used to say? My father used to say, "Son, free is a really good price." So
Yes.
it's on me tonight. So come and
Yes.
party and have a good time.
Absolutely. All
All
right,
right.
guys.
All
Thank you
right.
so
See you.
much for coming on. I appreciate all of you. I appreciate Joe for coming on with his expertise. Raj, thank you for
Thank you.
coming on as well. I hope to see you all tonight at the landing in Hillsborough. We'll be there at Raj says 5:45. Dress to impress. Be the belle of the ball. Raj will surely be.
Yes, I will.
Awesome. So you
All
guys
right.
have a great one and have a great weekend. I hope to see you all later. Oh, by the way, don't forget tomorrow, the meet pictures with Santa in the office. If you guys want to come in, we could use a couple hands to come in a little bit earlier to help us kind of set up a little bit. If you guys want to come out, show support, bring your families, bring your kids, bring your clients, bring everyone you know. Come on out. It's a really good time we have in the office. a lot of people, lots of stuff going on. So it's a good time. So today we go and party. Tomorrow we come out with family. So don't get too hungover.
Thanks, guys.
All right. Have a great one.
You too.
Thanks.
Thank
Bye.
you.
Thank you. See you tonight.
See you tonight.